What is up, everybody? Welcome back to the crypto trading channel, your favorite one of them all. Now, in today's video, I'm going to show you a little bit about Bitcoin. We're going to do an update on what happened since yesterday's NFP meeting, so non-farm employment, and also we're going to talk about why you should take care and watch out for Ethereum's price action in the upcoming days, because it may be looking quite bearish. Now, if you do enjoy the video and if you learned something new, make sure to smash the like, subscribe, you know the drill already, and let's get right into it. So Bitcoin, as I've plotted out before, is between two consolidation zones at this point. We have a strong zone of resistance up on top, which is highlighted by 3 touches, or at least 3 touches right here, right? That is my significance when it comes to plotting a support or resistance zone. And we also have a strong zone of support around the 19.5k level, right about here. Now, what is going to happen with Bitcoin? Well, we're not going to try to predict the market. As always, we try to react to what the market gives us. So what are we going to do? We're going to wait for Bitcoin to exit this consolidation area. And if it exits on top and makes a nice pullback, well, this could be a good buying opportunity into the next level of resistance. However, if it does go down and it makes a pullback, well, this could be a nice short opportunity right here. So let's not limit ourselves to only looking at, longs, or only investing in the market, or only dollar cost averaging, even though it is a very valid strategy. Let's try to, both long and short, so we can always take advantage of the market. Now, Bitcoin itself is in a weird position right now. This news that actually came out during the meeting yesterday showed that US job growth actually slowed in August, even though it was a little bit higher than anticipated. So the US added 315,000 jobs in August, slightly more than expected, but it still reveals a slowdown in hiring amid these rising interest rates, which means that this monetary policy is in fact working, right? Which is a good thing, but also a bad thing. I mean, it's very normal for, when interest rates are being hiked, inflation will go down, but also economic growth will go down, which is a trade-off that central banks have to take if they want to preserve the value of the dollar. Now, more aggressive interest rate hikes at the US Central Bank on the next meeting may be due. So this would mean an even more bearish scenario when it comes to cryptocurrencies. And in general, a few people out there are showing a 64% chance of a 75 basis point hike next meeting, which is quite a good hike. And, it's not as large as what we've seen before, so it could actually prove to be easier on the crypto market than before. So we may be entering a period of slowdown and consolidation, which we can see on the chart right now. But if we move on to the higher time frames, it could be that the market is too extended towards the downside, right? We could be expecting a movement towards the upside, even into this area at some point when looking at the 4-hour time frame, because it does represent a significant zone of resistance. But if you move on to the daily, you will see that even if we do make that type of retracement, we're still making somewhat of a correction pattern, waiting for a breakdown and a new bottom to form. I don't believe that this is the bottom quite yet, because of these monetary policy meetings, because of these rate hikes, and because of everything going on in the market. Inflation still has a long way to go before it is subdued, and you can learn a little bit more about that keeping an eye on the US 500, because it is the most important index of 500 largest companies in the USA, and it still hasn't reached ideal Fibonacci levels, which would be the 50 or 61% level, looking at the chart since the pandemic times. So once we do, form a retracement, let's say into the 61% level, then we could look at the market slowly recovering and starting to move up once again in the next bull run. But this could happen as far as, March of 2023 or even later. Now, nobody knows the time or the exact moment when it's going to happen, so we always just try to react to what the market gives us rather than trying to predict it. And currently, we could expect some upward movement as well. So be careful, right? Ethereum, on the other hand, is looking quite bearish at this point. Now, this is bearish in the short term because we have a beautiful head and shoulders pattern on the 4-hour time frame. On the daily time frame, well, we just kind of made a huge move down, then a huge move up, retracement, and then we're probably preparing to move down once again. If you take your fib levels, you can see that Ethereum has almost reached the 50% Fibonacci retracement level. So it could start moving down from this point, but it also could make some upside as well. So let's plot out a few scenarios when it comes to Ethereum. First and foremost, on the daily time frame, if Ethereum continues to move up, we have a zone of resistance around this area. That's the first one. The second zone of significant resistance would be somewhere along the lines of this level right here. So it's quite close to one another. Now, if you move on to the 4-hour time frame, you can see this head and shoulders pattern that I pointed out before. Left shoulder, head, right shoulder. You have a neckline somewhere at this point, and we have a breakout down below and a retracement and somewhat of a correction pattern. So having in mind that this correction pattern was actually broken out of with quite some nice bearish volume, we could expect price to go down as far as the 1360 mark before potentially finding a bottom and moving into these zones up there. So when it comes to Ethereum, we could expect price to move like this and then continue moving up, reaching one of these two levels, Fibonacci retracement, and then, you know, if more rate hikes keep going down, we could even go more towards the downside. But that's pretty much it for today's video. It's a quick little recap. You guys have to understand that we're not trying to you know, blatantly like long, short, or whatever. We're trying to do some analysis over here, and something that does coincide with my strategy personally is when you see a correction pattern such as this one, or a downtrend or line, or just a basic correction, right? And you see a strong bearish candle close, which is this big red candle right here, and then the next candle makes a wick up and then starts breaking the low of the previous one. As it is breaking the low of the previous candle, I would consider a good selling opportunity, only in the case that we have a clear left hand side. So in this case, it's not too clean, so I would refrain from taking shorts, but you know, once the case actually shows up, I may give you an opportunity. Now right here, what you can see is, for example, some clean candles to the left hand side right here. So this area between just this area right here. So this is a very clean area to the left, which means it's unfilled liquidity, which means that if we get the price moving up and a candle break above this level, the next candle make a wick down and then break the previous high and then start moving up, well, at that point is where a good buying opportunity could arise. So I hope you got some nice insight into, you know, my strategy. I will talk about it a lot more in the future, so if you want to know more about that, well, subscribe to the channel. It means a lot to me. I want to share some free knowledge with you guys, so why not? Now, thanks for watching another video. Lastly, I'm not a financial advisor, and you should do your own due diligence before investing into anything in the crypto, blockchain, or NFT world, and I will see you all in the next one.